So,
talking.
Ira, how far did you run today?
4.5.
Nice.
4.5.
Yeah.
So, do you have any? You must not have any back or knee issues to be able to run that far outside.
I have had for let's see, 73, so 47, for 47 years, I have zero cartilage in my left knee. I had a classic
Ow.
old time operation where they took out all my cartilage. I was in the hospital for 7 days, if you can imagine that, with a knee surgery. I ski. And I've been to doctors because sometimes I have pain. It's on the outside. It's on the what is that? The exterior side of my left knee. And I've just learned to live with it. I mean, I played basketball very competitively up till about I was 50 in different leagues. Still played football till my son's friends, when they passed the ball and I couldn't break on it to intercept it, I said, yeah, I'm done. My legs. So I tried to stay away from stop and start sports. I may go hit tennis balls. I'm not very good at that with my wife, but so I don't play. I haven't played basketball since I'm 50 because I just couldn't. It took me 2 days to recover. 3 days. I can run because it's all in a straight line. It's not stopping and starting. So, and a doctor told me I went to see if I could get some of that stem cell cartilage done. He was a long distance runner, kind of why I went to him. And I asked him about it. He said, "You have no cartilage to grow. You're not a candidate." But he told me, he said, "Do not let a surgeon touch that knee." I said, "Yeah, I know. I've been to them. They want." He says, "The scar tissue has set in such a way," he said, "God did a better job than anybody else could do. And if they go in and clean it out, you're going to have more problems." He said, "I can treat the pain for you." He says, "You're enjoying your life. Go do what you want to do. If it hurts, don't do it." That's been for the last 10 years. So, you know what? I kind of stay within myself. I run on the golf course, up until a certain point. It's right outside my door. It's like have my own private park.
Oh yeah, so you have some cushion. At least you're not running on the pavement.
I get on the pavement, but I try not. Most of the time, I'm on the treadmill now. But now with the health club closed, which I would go do 4.5 miles on the treadmill, which is far easier because there's a lot of elevation here. I'm up in northern Scottsdale, so I mean, there are times I just have to walk. I'm just not in that kind of as good a shape as I'm in for my age. It's not that kind of shape, so.
All right, so Ira, you realize that this is now our 70th interview.
No, I didn't know that. 70.
Yeah, well, I keep count. This is number 70, so thank you. I mean, the whole series has been terrific, and anybody that hasn't listened and wants a PhD in how the world works, it's all there online for free on the White Wave Trading YouTube.
Hey, I'm proud of my oats call. That's all I'm saying. I'm still riding it. It's one of the few trades I've been riding for 3 weeks. Ever since I did that hit with Credelli.
Are you in the Julys now?
Yeah, I rolled to. Yeah, the Mays were untradeable the last week of April. But there's some interesting volume. You got it up. There's some interesting volume sitting on top here. There's like 60 contracts offered between 303 and 305.
Yeah, this is a nice looking pattern. And your whole commodity thing, from the BCOM.
Yeah, no, it's good. And the BCOM is starting to look very interesting.
Well, yeah, and it had that ORH day on Monday.
Yeah, the day I said, look at the silver gold.
Yeah.
It's been a good play this week, which tells me it's commodities. The copper is telling you, right now I don't even care about the crude. Crude's too hard for me to figure out any kind of a global macro analysis. Not technically, that's a different story. But there's so many different elements. As you see yesterday, you had a sizable rally, and then it dropped $3.50 like nothing. So that's a very tough. I mean, if you're actively trading it, good on you, as they would say in Australia, because there's a lot of opportunity there. I'm not playing there for the moment, but doesn't mean that there's not a great trade there. I think the trade is very good. Okay, so
Yeah, and the other thing too is that Rob was trying to get a hold of you because he was so on top of that cattle.
oh,
trade.
he's a friggin' genius. I love the guy. My kind of guy. Next time I'm in Amarillo, that's it. I'm stopping where he said he's going to take me for a steak, but I may stop there and visit with him. He's a very good man.
Yeah, I mean, and it's the real experience with this guy with a chuck wagon, the whole thing.
I love it. I love it. And he said, he said, I don't have a horse yet. Hey, you know what? But I'm not an inexperienced horse rider. I remember when, who was it who used to have a barbecue every year with horses? Somebody from the meets back in the East. And I was riding. We were up in Wisconsin. It wasn't Raz. It was somebody else. But maybe it was a group of guys. So I was riding, and Mort Levy sees me. He goes, "What the hell are you doing?" He says, "You can really ride." I said, "Yeah, I actually had some experience when I was 18 years old riding a little bit. So I learned, and not English saddle riding."
Well, we had a good laugh at your expense, so just so you know.
Okay, why?
Because we told, I said, he probably rides like the rest of us Jews, and all the hair will get rubbed off his rear end. And he burst out laughing, and he said, yeah, he had some guy riding on that thought he was good, and he had a huge blood blister that burst on his behind after the first half of the day.
Well, actually, because there were times how old am I? It's almost 50 years ago, where I was actually in the saddle for 4 or 5 hours on some days. So, I learned, I don't know that I get where I'd be, but it's fun anyway.
He's
just to go talk to a guy on a real ranch who's really involved is a good thing. Okay, but that's besides the point. All right, so where do we want to cover the forward market?
Yeah, Angelo is trying to figure out, how people are trading the forwards, and because there was a lot of talk about that in the news the other day, and
okay,
not my thing.
So I haven't sat and worked the formulas. There's a book or papers written by a guy who I learned from and even when I was in graduate school, he was the operative guy for foreign exchange, Robert Z. Aliber, Aliber. Go grab the book. It's a short book. It'll give you the whole formula. But the forward market is based upon interest rate differentials. So you factor into the interest. So let's say if the US is 0 and the EU and the euro is 0, forward market will be flat. It ought to be. Sometimes you get some anticipation built in there. That's why I love the forward market. But in these interest rate markets, very rare. When interest rate differentials are wider, 3%, 4%, 5% between the different currencies, because everything's to the dollar. So it's dollar, euro, dollar, sterling. I mean, you can figure them out the other way, of course. That's how the crosses are done. But it's very formulaic, and it's time by interest rate differentials. That's pretty, but get Aliber's book. I taught this course at the CME in 78, 79. Ray, shit, come on. Sorry, Ray. He still laughs about it because when I taught the course on foreign exchange, he took it. He was a clerk for Morgan Stanley. Ray, Judd.
It's not Schofield, but
Ray McKenzie.
McKenzie.
Yeah. So
here you can see it right now. I've got the Euro cash up, and I put the futures up.
Yeah, right.
That there's like an 8 tick. The futures trade 8 ticks over the cash, and
which is as narrow as I've seen it. I can't tell you how many years, but that's because the Fed cut rates, the ECB didn't cut rates, so you had it narrow in. I could actually, if you want, we'll get Bruce Light on. Maybe he'll give a little tutorial.
Oh, okay.
He's still trading them. I'll make a note. I know he's down in Champaign. His dog had to go get cancer treatment. But I'll make a note to talk to Bruce, and we'll get him on, and he'll give a a 20-minute tutorial.
Yeah, well, he reads the stuff, so
Oh yeah, oh yeah, yeah. No, he's one of the greatest. He may be the best. I've had a lot of good people work for me. Bruce on forwards. All right, I will check.
So Ira, when you do a currency trade,
Yeah.
do you have a personal preference, you know, whether it be futures or something else?
I don't trade spot because you know what I did? I used to trade spot at ABN after I gave, well, I mean, for 16, 17 years, I ran an arbitrage. So I traded a lot of spot. So I know the spot market well. And I really had a lot of good teachers in the spot market who taught me the forward markets in a practical, not just theoretical sense. I learned a lot. The Swiss forwards used to be the most fun to trade because the Swiss had a regulation where the banks had to balance their books at month end. So there'd be wild movements in the interest rates. And another time was when, ALIBER, Eric. Got it? ALIBER. But I'll have Bruce come on. I'll get him to do it because he's actively involved. In fact, he calls me and bitches about him because he's doing them for a big firm and they're trying, just to arbitrage. And he goes, fuck, and that's typically Bruce, fuck. And I go, I know, because, it's certain and then there is some, because you've got the basis, the forward swap trade going on. So like with Japanese, sometimes they get bid in anticipation. And that's what forward markets are good at. They'll anticipate certain moves. So if I watch the forward market and I start to see some moves, it tells me that there's a little uncertainty somewhere about something. Right now, I'm not seeing it. Actually, this forward swaps is pretty well behaved, especially with the Fed as aggressive as it is, and people are trying to figure out, are we going negative? Are we not going negative? And I think the movement up for the last 2 days, because the euro has actually performed pretty well. And this will lead us into the next part of the discussion, because I know it's the same thing. I talked with the PAX guys yesterday. They want to know about it. So I spent a half an hour with them on this issue yesterday.
Speaking of negative rates, Ira, is the Bund catching up to the Swiss 10-year? It seems like
it
seems like the yield on the Bund is catching up pretty quick to the. I mean, what was it? Negative 57 on the Swissy yesterday, or I think it was yesterday.
Hold on, let me grab my sheet. Yeah. I will tell you right now, the Swiss 10-year is 52, negative 52. Germany is negative 54.
So actually, it surpassed the Swissy.
Yeah, because you know what? Especially after, and you're forcing me, we're getting there whether we want to, is quick or not. But after the German high court ruling, the Bund, of course, got a bid. Now it's kind of settling here. Let's see.
yeah.
It's like all of last year. I think all of last year, the Swissy was yielding a lot less. There was a wider spread between the Bund and the Swiss.
No, you're right. It's definitely changing. There are some movements in the Swiss, but don't forget the Swiss doesn't intervene on its own bond market. They're buying everybody else's, which is the point.
That's true. Yeah.
So, you know what? So do you want to own a Swiss bond at negative 54? I doubt it. There was a story out, and I know Judd picked up that one yesterday. Judd, what were you talking about with the bank? Because you talked about the Swiss, and I know I saw the story in the FT.
Yeah, because they were buying Facebook, Apple, Google, Microsoft. Yeah. I mean, so those aren't going to break. Besides, they're buying them. Apple's buying their own stock back.
Don't forget they lost $40 billion, on their balance sheet the first quarter because they own so much in equities.
Yeah, and they've regained all that plus.
Yeah, and they made $47 billion in the last quarter of 2019. So when I read those stories, and if you don't cite that, all you're doing is looking to sensationalize the headline, you know, again, the narrative. And their gold holdings went up 3 or 4 billion. Now, the interesting thing for the Swiss National Bank on their gold holdings, and I'm sorry, I'm going to Holden Caulfield, I digress, digression, somebody should yell it out. But the Swiss gold holdings, they really haven't added to their gold. And I know somebody on my blog, Alex, who's Swiss, talked about, but they have not added an ounce. How do you know that? Because when the gold was back in 2012, I think the valuation on the Swiss balance sheet was about 48 billion in gold. And that's where it is back today, basically, even though we're not quite to 1900. But you know what? So it tells me they haven't bought any gold. They haven't sold any gold. You know, they've had a couple referendum on it because that's the way the Swiss electoral system works, is through a lot of referendum. And they haven't passed it. But I think the Swiss National Bank, as good a job as they're doing, is doing a very poor job, because they should be diversifying. They should be taking some of these gains in the equity portfolio off and acquiring some hard assets, silver and gold, and some other things. I don't, you know, who am I to say they've done very well? But I would be diversifying away. You got 830 billion. I think that's what the article said yesterday in holdings. Yeah, you know what? Go take 75 billion off and put it into various other assets. That's what I would be doing, but I'm not running the Swiss bank. So that's why I think you've seen some of that movement, especially after the court ruling. Although, you know what, the Swiss really hasn't done that well. Euro Swiss is kind of hung in here. So Judd, that makes that article that much more pertinent, because yeah, they were definitely intervening. But when the euro goes up, they don't tend to intervene. Now, the euro, I bought euro this morning, and actually sold the Italian as it rallied, and bought the French and sold the German. So I said, well, if the Italian's going to go higher, now I sold it at my levels. I was very patient. I think I sold the Italian when it was up 140 ticks in the futures. Let me see if that's right. Yeah, just about. I almost sold it on the highs. And I put that butterfly on, but I bought the euro against it, and it's actually worked pretty well. I'll take it off by the end of the day. But there's so much going on in Europe. So do we need to talk more about the forwards?
No.
No.
Okay. All right.
All right.
And
So
again,
sticking.
you can probably all go watch like a TED or a YouTube. I'm sure somebody's made a YouTube on it. And in 15 minutes, you'll understand the forward market in its entirety. But I'll have Bruce come on if you want.
Yeah, that'd be good.
Okay. All right. So now I guess we want to go to the court ruling.
Yes, and Ira, before you actually do that, I read an article that said, and we already knew this, that the Bundesbank is the biggest quote unquote shareholder in the ECB, and if the Bundesbank doesn't participate or stops participating in the ECB's public service purchase program, the PSPP, that the ECB might have difficulty actually executing that. Do you understand what the heck that means? I don't understand how the Bundesbank participates in the ECB's purchase program.
Because everything goes through each national central bank. So when the ECB says buy it, so it's all done.
So the Bundesbank, so each central bank, we say, so the Bundesbank buys bunds, the Italian central bank buys the BTBs, et cetera, et cetera?
Well, as central banks, because otherwise the ECB, they just direct them and they're held, you know, but it's the ECB's balance sheet because they're doing it at the direction of the ECB.
So do euros have to flow, printed euros have to flow from the ECB to each country's central bank?
Exactly. And then that's how the target 2 works. Because let's say I'm an Italian, let's say I have $5 million and 5 million euros in an Italian bank. Well, in today's world, I'm actually an idiot for holding it. It's still euros. So because of the way it's a unified financial system, although it has no euro bond, I take my $5 million out of Monte Pesci Bank and I put it in Deutsche Bank. Okay.
Gotcha. Now, does each central bank, do they have to purchase the bonds on a secondary market, or are they allowed to just buy it directly from the government, unlike us?
Secondary market.
Okay.
That's one of the critical issues with this. Otherwise, it would be direct financing of the government, and that would be an absolute contravention. And those Target 2, I think the Target 2 for the Bundesbank, which means that depositors outside Germany bring their deposits, I think it's almost up to €1 trillion. And that's a liability on their books. Well, if I'm an Italian and I'm worried about my banks, why would I hold my money in an Italian bank? It's still euros. I may as well hold it in a German bank. And if I really want to hide it, I'll hide it in Luxembourg, but because it's still euros. But it's still, it's not an easy issue. There's a lot of moving parts with this because they don't have a euro bond, so it's very convoluted. So I mean that's why the bank talked about proportionality. I'm still really trying to wrap my head around proportionality in the way that they mean it. It's like one of those terms. Well, what do you really mean here? So now the gloves are coming off because the European Court of Justice said this morning, fuck them. We determine law in Europe.
So do you think that the German court could actually prevent the Bundesbank from participating?
Well, that's a very good question because whose law, again, I always ask this question for those who read the blog, whose currency is it, right? Is it the German currency or is it the Spanish? Because that makes a big difference. It's an important question.
So Ira, let's say that that happens, right? And the Bundesbank stops buying bunds, right?
Yeah.
Now, here's what I find interesting. Does the yield on bunds go up, or does the yield on bunds go down because now more investors want bunds versus everything else?
Yes, that's right. And that's why the Bund, in answer to the Swiss question, the Bund is the most desired security for repo. Don't forget the European banking system has a repo operation too, but you have to pledge collateral. So everybody wants the best collateral. Also, people buy bunds because if your deposit rate is negative 50%, 50 basis points, and the Bund is negative 50 basis points, I'm better off owning a Bund than I am putting my money in the bank. It's still going to be a negative drain on me, but I have some sense of appreciation with a Bund. Really, all I have is risk with putting my money in the bank. So you see what people buy these things and you're, well, you're losing money. Yeah, but what's my alternative?
I start thinking about this stuff and it makes my head want to explode.
Yeah, don't worry. Now, how's it feel to be in my shoes? Give me my shoes.
So we basically now, so at this point, what do? We play the waiting game until August? Because I think the ECB's got 3 months to respond, which I don't think they're going to respond to shit.
Well, they say they'll respond they adhere to the European Court of Justice. But, and this is a big but, a gigantic but, which is, and nobody, see, that's why you can't read the media because they're so pathetic. The question is, will be, and who guarantees the EU? You know what? And Judd, how many of these we've done? 70? I guarantee on 40 of them we've discussed this issue.
Yeah, this is the 70th one, and yeah.
So it's the German credit card that guarantees this. So it's, The ones who won't acknowledge it is the Germans. But the fact that the Italian 10-year still, after all this noise, it's at 180 this morning, okay? 180. Now, would anybody seriously buy Italian 10-year debt for 180 basis points if they didn't believe that it was guaranteed by a higher force? We saw this. Go back to 2012, July. I keep pointing people there. The Italian 10-year then, and when the economy was crap too, they were in a in dire situation. The Spanish, the Italian, even French, I think were 4.5%. But the yields were extraordinarily high, which is why Draghi had to act. And the 2-year yields, I think, were right there too. So it was expensive to finance themselves, so something had to be done. Now, let me tell you this, and this is the real issue. So there is an implicit German guarantee, right?
Right.
You have any problem with that?
None.
Okay. And we have how many people? We have 35 people. So if you disagree with that, say you disagree. But otherwise, how could these yields be so low? Even the Spanish, which are suffering here again, and unemployment is going to jump up again, and their deficit is going to explode again, even though they've been a little healthier. So their yields are at 79 basis points. Seriously, would I lend money to Spain at 79 basis points for 10 years? But relative to the Bund, you go, well, at least I earn 80 basis points. Yeah, but you have all kinds of risk. And if the euro blows apart, because that's what we're talking about. If Germany said, fuck it, I don't care, we're done, I can't do this, because the only way now that the euro can exist is if the Germans basically surrender and allow for this to be a transfer union. Meaning that if Germany's making all this money from their current account surplus, that they're distributing it out throughout the euro area. So and I know somebody asked a question about percentages. Who was it? Angela, was that you?
Well, yeah, but I mean I think that's the specific issue that the German court wants to know. I think they want to know what the ECB stance is and how they implement proportionality.
Well, it is a good question, and they haven't really defined it. So is it proportionality due to what the ECB is doing? Is the activity proportional to what needs to be done? Because I've read one interpretation of that. There are several interpretations. This is interesting. And I am comparing this to the Dred Scott decision in the United States in 1857. Because this is an issue. One of the key critical elements in this discussion, and the court talked about this, and this gets to the heart of the issue. Is German law subservient to the European treaties, or is the European treaty subservient to German law? So we're discussing basically the same thing that led to the U.S. Civil War, states' rights.
Yeah. Well, Ira, that's where the rubber's going to meet the road. It's
yes,
going to boil down to sovereignty.
That's
right?
Exactly right. That's exactly
okay. It's all going to boil down to sovereignty, and whether or not I still believe, and I said this to you last time, I'm a conspiracy theorist in this regard. I firmly believe, and I have no basis for this other than just my own speculation, but I believe that there are unseen powerful forces inside of Germany that are trying to keep their boot on the throat of, Portugal, France, Italy, Spain, so that one of them blinks, and then Germany's got a way out so that nobody can directly point the finger at Germany for saying, see, you left.
Well,
but that's just me.
You know what? Okay. And you know what? Again, and I apologize. I have not sent out the Rotten Heart of Europe because I do have the books here. I got to get them out. And I told the people at the store, I have 5,000 in storage. If anybody wants to go pick them up and really do me a favor and take them out of there because because I told him I'm not paying after July 1st.
Ira, I just got the book on Kindle a few weeks ago, and it's really a pretty awesome book. Yeah.
Oh, it's, if you can read it on Kindle, it sounds like Pete, right?
That's
Yeah.
right.
Okay. You know, somebody can go get them out and distribute, go through, because it's such an important book. But it's filled, you know, and Europe can't get away from it because Europe won't make a decision. And you know what? And I listen to all these people who tell me this, and this about it, but they're all people who benefit from the existence of the euro. You know, I had somebody the other day call me and we were talking about it, and they said, well, before the German court ruling, the German court will bend. They'll bend to the necessity. I said, well, I'm not sure that you're going to see that. But he was hoping that they were going to bend because he couldn't see any other way. Why would you put an end to this? Well, you know, the German people, and there's been discussion on the blog about it for the last couple of days. The German people, there are no good guys in this whole argument, by the way. There are no good guys. Because in order to form this euro, bring the euro to fruition, got the Maastricht Treaty, there are a lot of people who, you want to talk about kicking the can, they kicked the can. And this is where we're at because they didn't want to make a decision. They didn't want fiscal harmonization because nobody, again, as Angela says, it's an issue of sovereignty. When you surrender your currency, you're halfway surrendering, you're a quarter of the way surrendering your sovereignty because you're no longer in control of your monetary policy, really. You're subservient. But that's no different than pegging your currency either. So they did that, but they weren't willing to surrender fiscal authority. And that's what the court is really talking about because the Bundestag has, under the German Constitution, has authority. And one person I'm waiting to hear from is Wolfgang Schäuble, who has got a very powerful position in the Bundestag, and it involves really oversight of the budgetary process. So I'm waiting for him. And he's a very hard money person. And that's just reality. So I want to hear from him. But there is 3 months to play with here. The positions, though, are starting to harden because Brussels and the European Court, they know what's at risk here because the German High Court really just threatened the entire concept. Because again, what is to prevail here? Is the EU treaty, is the Lisbon Treaty subservient to national law, or is national law subservient to the demands and desires of the European Union? You got to make a decision, and they're almost calling the question. And the real loser here is Merkel, because she's responsible for this whole thing because she, again, ran interference for Mario Draghi. Draghi could never have gotten done by building up the ECB balance sheet without Merkel defending him every step of the way, because every time he came under attack from Axel Weber, from Jens Wiedmann, from the Austrians, from the Dutch, Merkel gave political cover. She's responsible for this. So I don't want to hear from the damn media about how wonderful Merkel is. She's not that wonderful. She has made this possible, and now it's all coming home to roost. It's no different than the people in the United States with the 3/5 compromise and never resolving the slave issue because they were afraid of breaking up the union. So they danced around it many times until you ultimately had to have a civil war to resolve the issue. Was the union indissoluble? Well, we are here. And unfortunately, they don't have an Alexander Hamilton. See, Hamilton resolved that issue by consolidating all the debt in order to get the Constitution and the United States of America, rather than what preceded it was the Articles of Confederation. But Europe doesn't have an Alexander Hamilton, although they have a Christine Lagarde. And Christine Lagarde, and I, believe me, this is hard because I was never a fan of Lagarde when she ran the IMF or she was the French finance minister. But anybody who's followed my writings and my discussions with Santelli, and Santelli and I haven't been on with Santelli. That's not Rick's doing, that's other issues. But when Christine Lagarde first took over the ECB, I did a couple of hits with Rick, and we gave her rave reviews. And Rick wasn't a Lagarde fan either, but she knows what has to be done here because it's too late. It's too late because what Merkel allowed was, and all of a sudden this word started creeping up in the last couple of days in the FT, a backdoor Eurobond. Well, I've been talking about a backdoor Eurobond for 4 years because as they built up that balance sheet, that's in essence what you were doing. You were creating a synthetic Eurobond because all they do is have to consolidate all that assets, all those bond purchases, sovereign debt purchases, and consolidate and say, okay, we got a Eurobond. We're taking those, reforming, and it's a bond. We have a Eurobond. Well, it'll set off fireworks well beyond anything that the German High Court, because again, it's a very tough situation. Well, my question then back is, well, what if the Germans say, okay, we're not going to support this, and this is all going to blow apart? It will create, and this is what Lagarde knows. She knows this. The Germans have no real hand to play here. That's why the court being involved, of course, this is their third or fourth ruling. This was the most direct, though, even though they're still dancing a little bit. But it will create a massive global deflation because the losses to the global banking community for all those who own Italian, French, Spanish, Portuguese, Irish, they will take massive losses because you will have a repricing of all that debt. And that will cause massive losses for pension funds, insurance companies, and there will be a lot of forced selling of various assets. I don't see a way around it. And that's the strong card in Lagarde's hand. And that's the way I see it.
You know, there's no easy way out, that's for sure. But you know, if you go back to sovereignty, Ira, right? Maybe the Germans think, okay, fine, we're going to have to suffer through this barrel of elephant dung, but at least we still have our country intact.
Right.
Versus a consolidated banking system and a centralized European government.
Yeah. Well, listen. Merkel should have known she was in trouble, and I think she did. And it shows within her popularity within Germany. But last year, when Macron thought he had the upper hand, when Merkel was already weakening, and he tried to push through with the Italians a consolidated type of FDIC strategy for supporting banks across the EU. You know, they don't have FDIC insurance.
No. And maybe Merkel grossly miscalculated how easy this project would be or not be.
Well, don't forget, she was brought into political power and influence by Helmut Kohl. Helmut Kohl's one legacy, and the only thing he cared about, was the unification of Germany, which he accomplished. And then he played around a lot, you know, and he agreed to, you know, to bring forth a Maastricht Treaty. But of course, the Germans never voted on the Maastricht Treaty, by the way. Never. The French voted on it, and that's when Mitterrand was the president. And anybody have any idea how that referendum went?
I don't.
The outcome of the vote was 50.2 to 49.8 in favor.
Oh, that's right. Did Connolly have that in the book?
It's probably in the book, yeah, because
You know what? Now you're right. Now I do remember that. Yes. Now that you
that's
mention
how
it.
close it was. And when I followed it, I said, wow, they must have vote counters better than Chicago. Now, also something else that took place. Because Mitterrand, who was phenomenally popular as a French president, and a popular sitting French president of that nature only got passed by that much. No German vote again, remember? And the Dutch, I think, had to vote a couple times. The Danish voted it down, which is why the Danish are not in the euro. So Mitterrand, on the campaign trail, told the French people that they needed to pass this in order to ensure that there wasn't war with Germany again, in which Helmut Kohl took great umbrage and made Mitterrand apologize to the German people because he called them warlike, and that's their nature, and we can't entertain that. And that was the selling point. And I actually saw Helmut Kohl speak in 1995 at the Chicago Council on Foreign Relations. I took my son with me. He spoke in German, but the whole thing was about what a grandiose European project was, and it will prevent another war in Germany. I'm sorry, in Europe. There will be no more war. That's what it has accomplished. But Helmut Kohl left, he kicked too many things down the road because he knew he couldn't get certain things done, which is why it never went to a referendum in Germany. Never went. So Merkel, who is the protege of Helmut Kohl, I think she accepted certain things willy-nilly, but those things were coming home to roost. And I think she's made some categorical mistakes. And I've believed that. I'm not jumping on her. And it's like, again, the birth of the AfD, the Alternative for Deutschland, which is a far-right party, who really was the one who instigated these court cases anyway, was a group of economists and lawyers in 2013 who really started this. And the media has, of course, always portrayed them as an anti-immigration party. Oh, they're far-right crazy. Well, that's true once the immigration issue, which Merkel screwed up anyway, became an issue, but it wasn't the only issue. A lot of it was that they didn't like what the ECB was doing. And the Germans can argue, very rightfully so, and they will, as I wrote, first of all, the Germans say, why should we send money to you? We made the hard decisions. Back in 2001 to 2005, Gerhard Schröder was the chancellor, and he instituted what was known as Hartz IV, which was massive labor reforms. Because German unions, who have a lot of power and do a good job with their power, by the way, I'm very respectful of the system, but they understood that the EU, just like NAFTA, was going to move jobs from Western and Central Europe to Eastern Europe to take advantage of Czech, Hungarian, Romanian, Polish labor forces who were unleashed after the fall of the Berlin Wall. So they were really highly qualified workers with low wages. And the German unions understood that if they didn't compromise and keep a lid on wages, that the jobs were going to move to Eastern Europe, and you had a unified market system. So they had lost a lot of leverage. So it was Schroeder, being a SPD of the SPD, the Social Democrats, was able to pursue this with labor, and labor said, okay, as long as the jobs don't move, we'll basically freeze wages, which is what happened. So Germany got a huge advantage, trade advantage within the EU itself, because Spanish wages were rising dramatically, Italian wages, German wages held the line. So their argument is, hey, we took the pain. We weren't profligate. We were frugal, and we took the pain. We knew what was coming. Why should we transfer all this money to those spendthrifts who wasted and wasted and wasted? But that's just one side of the argument. And the Germans, again, there's nobody here with clean hands and innocence, by the way. There's a lot of, and nobody wanted to make a decision. Most of all the Germans, they didn't want to make a decision. So now you're getting to the break point because German citizenry who've borne the brunt of the last 12 years through classic financial repression with basically zero negative interest rates, nothing on their money. And yes, the country as itself has done well, but various segments haven't, and they don't like the runaway price inflation in real estate because, I mean, that was easy. In 2000, I've had this discussion for 6 years, and there were some ETFs, some German real estate ETFs to partake in but I didn't want to buy in on the DAX. So I said, people would say, what would you do with your money? I said, real estate in Germany has to rise because there's nothing else to invest in, nothing. And the DAX really relative to the S&Ps has underperformed, but that's because during the dot-com boom, German investors powered into the Neuer market and got burned badly when the dot-com, so they weren't rushing to stocks. The only thing that anybody could buy was real estate. And that's foreigners too, because if you had euros, where are you going? You may as well buy German real estate. And German real estate has done very well. But the Germans really don't like it because the Germans are not big borrowers. They don't like to borrow money. And they probably have, they used to, I'm not sure what the numbers are now, but as far as residential property ownership, they had like one of the lowest home. They rent more than they buy, which is really surprising, but they don't like to borrow money. So yes, it was kind of, it may have changed now. I really haven't looked at those numbers in a while, but all of this is here and now it's coming to fruition. And the issue, as Angela rightly talks about, is sovereignty. It's sovereignty. The issue is, and that's what the court has really laid down here. There's a really wonderful piece by David Marsh. I'll put it in the blog over the weekend and everybody can take it from there. And David Marsh is the guy who I read 25 years ago because he wrote a book about the Bundesbank that taught me a lot about German banking. So he wrote an article on this. I think he's one of the principal on this information site. But it's worth looking at. But the issue is sovereignty, and part of where the ECB runs into problems here, because as long as they adhere to the capital key, which is what Angela's first question was about, is who owns the bank. Well, the capital is all it's all based on the capital key, which is dependent upon the size of the GDP. So I think Germany's GDP is 19 or 22%, something like that, of the entire European GDP. Although it may have changed now that Britain is leaving. Boy, do they look like brilliant. But so that's the amount that they're supposed to purchase about. So if you're 22% of the capital of the ECB, that's supposed to be the level of how many bonds are on their balance sheet. So 22% of them is supposed to be German debt, and that's the capital. But if they're and Lagarde at her last press conference said, well, they were not going to allow fragmentation. She said it twice. We will not allow fragmentation, meaning she's not allowing those yield differentials to blow apart. So she will not adhere to the capital key. She will buy what needs to be bought in order to sustain those differentials.
Ira, if you want to add more, insult to the financial repression injury,
Yes.
Because you said, there's nothing for German investors to invest in. The German stock market's been going down for over 2 years now. I mean, they peaked out, January of 2018.
Yeah.
So, and as we know, they're in recession, so it's going to be interesting to see, you know, how Germany decides they want to get out of this thing or stay in it. I mean, I don't know. Human nature being what it is,
Yeah.
you know, if I had to guess, I'm going to say, you know, Germany wants out. That's just my guess. But that could, you know, who knows how long it'll take.
Yeah, except the damage, and this is, you know what? And this is,
The damage is going to be huge.
it's huge. It's a global issue. And the fact that the White House, you know, for a while, Trump was beating up the Germans. They have the largest current account measured against, you know, percentage of GDP. And they were beating on him, but he had it all wrong because they don't control the currency. He tried to make it a currency issue. It's not. It's a, the euro is 19 countries who are actively in it, but it's really, you know, 26 or 27 countries of the EU. So it's not. So it's just not Germany. Germany has benefited, and that's what the people who want it to be a transfer union, and for them and for Berlin just to send money to the rest of the EU as it's needed, that's what they argue. You've benefited greatly from this. You owe us. You owe us. You know, it's the Obama Hillary Clinton line. Well, you didn't build it. Well, yeah, you've just benefited from it. You owe us. And the Germans go, no, we suffered. Our union suffered. We built this. So this is going, I'm going to tell you what, if somebody will go pick up the Rotten Heart of Europe, you can send them out, you can give them away, you can take, I'll direct you to there, but you got to get them all out of there. Actually, I'm trying to get St. Vincent de Paul to take them and let them do it as a charity project. You know, donate $100, we'll send you a book.
That's one of those books you got to read it like once every 2 years.
Oh, you know what? I have it under, I've got so many different copies laying around in different places, underlined. People say, I'm going to read it on Kindle. I said, good luck. The footnotes are a page long.
Yeah.
But he's a
You
brilliant.
probably forget. You probably forget, but you sent me 2 copies back in 2016, I think it was.
I don't
I
forget.
got a copy under my bed.
I'll send them to anybody who wants them. I owe people. They are on the site, and I haven't done it because once this thing happened with the coronavirus, I got out of sync with what I want to do. But I owe those people. That's just wrong of me. And this is a good time. Now that you have all this time, this is a good time to read that freaking book. Because
I know we're spending a lot of time, or you know, in the aggregate, discussing, you know, the internals of Germany and you know, the negative effects. But what about the rest of, you know, Finland and the Netherlands and whatnot? Like, what's going on with them? Do they side with Germany?
Well, you have, they use it in the FD and other places. They refer to it as the Hanseatic League, okay? Which was a northern trade area of Europe back in the 17 and 1800s. I might be a little bit off, but it was the Dutch, the Germans, Swedes. So yeah, right now, that's what they call it. So you have, the Dutch are the attack dog for the Germans. So you have, you know, Mark Rutte, and what's his name, Nat, who's the Dutch central bank, and they're the ones out there attacking. They will not allow a euro bond. So when they have, you know, tried to push a Corona bond, it was the Dutch who were screaming and spitting, no, it will not happen, because they know what it means. But my response always is back, well, then tell me what the alternative is. Are you willing to take the hit? Because it's going to be a severe hit. And the more money that flows into German banks from Italy and other places, it's just building. And that's why I'm willing to bet that Christine Lagarde, when she really gets angry here, she's going to purchase $2 trillion worth of all kinds of debt, because she said she has clearance from the court that it's this other issue. So she's just going to build that balance sheet. And the more massive she makes that balance sheet, she was kind of sitting back here. That's why at the ECB meeting last week at her press conference, they really didn't do much. They did not do much because she was trying to see how this, but now I believe she's going to take off the gloves. And if I was her, I'd be in a hurry because the bigger I make that balance sheet at the ECB, the more I trap the Germans anyway. So I'd be in a real hurry.
One day at a time.
Yeah, but this now gets fascinating. Meanwhile, for the time that we've talked, that butterfly has worked good, and I just sold out the euro because that protected it because euro came off a little bit. But I'm going to play with this. I can see nobody really wants. The Italian goes up because the bank is in. The ECB's buying, and if people are short, they get run over, or whoever has access and is on the box with the bank, whoever has access, who's a primary dealer in Europe, they know what's going on. So they just start front running it anyway. The question is, I wait to sell it. I would never sell it on a break because I know they're coming. It's what makes trading the U.S. Treasury market now so difficult. I have not traded it since the last time probably in 5 weeks. And this yield curve, if you look at the 530, it's steepened out dramatically. The 210 is back over 50 basis points after coming in to like 32, 33. But I really am afraid of the Fed here because at any time, they're so active, they can just run you in.
Yeah. And the 108.79 is that outside reversal, that ORL semi-annual number. And the euro
that's probably the higher
up there, looking at it and stopping.
Yeah. Yeah, and it's the same time the Italian came off 70 ticks. So the Italian. Yeah. So you can see, I'm just telling you, I raised the issue. I'm not saying this is easy to trade, but if you can watch it and you have access to it, I trade it because it's on I trade the European bonds on the Eurex. I've spent a lot of time watching this and trying to get a feel for it, trading very small relative to what I trade, very small, but I'm just trying to feel my way through it. So I hope I answered questions. I said I'll get to the issue on the blog and I'll be more definitive because I got a lot of pieces. There's been so much written about it, and it's interesting to see the way some people come down. So I am aware. Everybody else should be aware because it's going to affect a lot of things. But I think that the dollar has been weak for the last 24 hours because, once Gunlatch and a few others started talking about negative rates will do the job for getting the dollar sold off that I thought the Fed should do by intervening, or the Treasury should demand. And I'm talking about massive amounts, just go sell dollars. And they really should mimic the Swiss National Bank and buy baskets of global assets. And I know it's in violation, but hell, nobody cares about the rules anymore anyway.
And the U.S. is trying to put an ORH weekend too. I mean, that's knocking on that door.
Yeah. So, you have a lot of things in play here. It's going to be great trading opportunities. And you got the commodities starting to perk up.
Yeah, and I think at the end of next week, I think is it for the grains. I think all the hedgers are done hedging, and then we're back to a weather market, and you can be long them again.
There's now 100 July oats offered between 303 and 305, 306. No, that's right. And you're going to see some amazing things because now there's so much money sloshing around. It's initially gone into the stock market because, again, this unemployment is going to be elevated. We were down to 3.5%. So let's say that unemployment settles in. And this is an optimistic view at 9% for the next year. Where do interest rates go? Now, I think it's a disaster really for the world if the United States goes negative. And it will have so many. Peter Bookfar put out a wonderful piece this morning. Let's see. Let me find it.
2 years kind of ticking starting to march towards negative right now.
What is?
2-year Treasury.
Yeah.
Negative,
Well,
but you know, it's declining.
let's look at the Fed funds, uh, September is at 1997. Yep. But it's a dangerous, it's a dangerous game to play because right now they haven't, the Fed people are coming out against it. But then you have the Rogoff piece, which I knew he'd show up, the piece of shit. He's so arrogant. He's bright, but so arrogant because people like the academic world now wants negative rates, by the way. Summers, Rogoff, Krugman, because it's a way for them to get electronic money. They want to get away from cash. And that'll be our next symposium.
All right, good stuff. A lot of food for thought, guys.
Yeah, there's a lot on the table, but rest assured, there's going to be so many different trading opportunities that have been unleashed here.
I picked up, I started putting a position on an XME in the last week or two. I'm up like 5%, but
Yeah,
I did it on some research from somebody who I follow who thinks, you know, through the end of the year that, you know, reflation is going to happen in industrial commodities and miners are, you know, from that point are poised to be an outperformer against the market. And I think maybe some of the stuff you say might agree. What do you think?
wait, I say it again. I'm sorry, Pete.
Just the XME, the metals and mining ETF.
You know what? I'm very high on them. Here,
You know, FCX, it's got gold miners and it's got, you know, like BHP and FCX.
yeah, you know what? Only because I think they've been so underpriced for so long.
Yeah.
Selective. Stay away from the ones that have massive amounts of debt because I'm always reminded of the Mark Twain quote that a gold mine is a hole in the ground with a liar standing on top of it.
No, it's beautiful. I know. That's why I just buy the index.
I know. Listen, again, this is the world that we trade in. It's like I talked with this guy Bosco, who's really been a blog reader for a while. He found me through James Sinclair about 8 years ago, and I talked to him yesterday because he's built a business off of one of my ideas, and he's doing really well with it, and he's very thankful. I like him a lot. He's from Windsor, Ontario. And we talk, and I'd like to live in a world where we were back to $42 gold. I said, you know, people talk about gold. I'm not gold bug. I would love to see $42 gold because it would mean that the world was in order, that the central banks had regained their credibility, that, you know, but it's not the world that we have. And I don't determine, I don't make the rules for the world. I don't dream of being George Soros, where I'm the philosopher king. All I can do is, you know, operate within the realm and the environment that policymakers and authorities provide us with. And right now, plenty of good opportunities, plenty of great trading opportunities. I know Rob has been all over it. Him and I were going back and forth yesterday. He's a lot of good people here. There's a lot of good knowledge and information shared. This should be a booming site. I don't know if we picked up anything from FRA, but this is a place where you can come and knock around ideas unlike anybody else. They're not just shoving them down your throat, and it's not people tweeting. This is a real exchange of ideas. And I wish people would push back more. Really, you know, if you got, I don't want anybody swallowing what I'm saying. Look at it, analyze it, and put it to work.
Yeah, there's a lot of things that, you know, we talk about and it's either not time or we don't have a trigger for it, or it's just not, it's, you know, there's no risk reward to do it. You know, we have a pragmatic bent on everything we do.
Yep.
Well, I like it how there's so many timeframes, experiences, and expertises on this board with Judd's guys here and gals, and I think it's fantastic. I think we're all learning a lot from each other.
Hey, you know what? this is an information business. I know, Judd will get pissed at the people who trade for, 1 minute charts. And as he says, 60 minutes is his minimum that he's willing to consider. And I started 240 minutes, but that's just me. And I'm not a great technician. I'm not even a good technician. I know the rudiments, which is enough. I could certainly look at a picture and I'm mathematically inclined enough to do, but that's not my strength. I don't have enough time in my life to make that a strength. And now you say, well, yes, you do. Maybe, but I spend so much time analyzing the fundamentals and digging into the fundamentals. That's my strength. And you know what? As what's his name, Morgan Hossel, who's just great. One of the, and the other guy who worked with a lot of traders on this budget trading. I forget his name, and I shouldn't. But when they discuss it, you got to find your edge and really work that. If you can apply some other tools, which Judd is a tool for me, not in a negative sense. That's just a tool but that's the information that we share, and that gets you into a much more comfortable zone of trading or not trading, because sometimes it might cause enough dissonance where you go, it's not a trade to be made. And that's not always a bad thing either, by the way.
Yeah, I mean, we've got, David Langer here. He's as good as anybody with mathematical models of trading and technical numbers.
Hmm?
I mean, and he's always on. But
yeah,
I'm like you. I can't go into the short-term stuff because as soon as I do that, I miss everything else that's going on around me.
right. Then it's, for me, I just work as my dear friend Lenny Feldman would explain to my friend Mort Levy, when Mort would say, well, what about all your work? He said, I love your work. This was 35 years ago. He says, I love the way you look at markets, analyze markets. Well, when it doesn't pan out, why don't you flip and go the other way? When the price action doesn't meet what you've seen. And Lenny looked at it because we were having a cocktail, and Lenny rightfully said it. And it was a great, it was a great compliment to me. And Lenny said, he works too hard at doing the work for him to do that. And if he did that, if he flipped because the price action told him that, rather than just getting out, but he went the other way and then it flew in his face, he'd be suicidal. And I've accepted that because that's exactly right. But I'm willing to, that's what I leave on the table. The one hole in my work is I should be more options oriented. Because I always admired Rich Dennis because he took his big views and applied them to when he thought options were mispriced. So he was always a buyer of it. And I learned a lot from that, from watching that. I have great respect for Rich for that. That's a big hole in my trading over all these years, because sometimes I can see moves from my fundamental analysis, and the markets may have been sideways, and the options are cheap. And that's when I really should avail myself of it. But I'm still learning, and I'm still changing, and I'm still reacting. So we'll get this done. All right, I'm going to go. That's a call. I got to go return. I hope everybody have a good weekend. Thanks for giving me the time.
Thanks, Ira. Appreciate
Okay.
it.
Thank you, Ira. That was great.
All right. And
Have a good weekend.
Judd, if anybody can, because I talked to the storage people. If anybody wants to go grab those books and got a place to put them or get rid of them, great. Let me know.
Okay.
Okay.
All right. Thanks.
Okay.